In today's video about REITs or real estate investment trust, I will cover everything that you need to know, including what they are, how they work, and why they are the king of passive income. I will also be giving you my personal top 5 REITs. If you are a bit like me and you really like passive income and you want to be invested within the real estate market, but you don't want to deal with tenants, contracts, or the down payment, then REITs might be the perfect solution for you. REITs allow you to invest in a portfolio of hundreds of properties. And if that sounds interesting to you, then you're going to love today's video about my personal top 5 REITs for passive income. But before we get to my personal top 5 REITs, then let's talk about what a REIT actually is and why they are the king of passive income. A REIT is basically a company that owns, operates, or finances income-producing real estate, such as apartments, office spaces, shopping centers, data centers, hospitals, and many other types of properties. They provide an opportunity, just like mutual funds, that makes it possible for the everyday investor to benefit from real estate investing and to get access to high dividend-based income. REITs are obligated to follow a set of requirements in order to maintain their status as a REIT, and this is what makes REIT very different from other companies. So let's take a quick look at those. They must invest at least 75% of its total assets in real estate. They must derive at least 75% of its total income from rents, from real estate properties, interest in mortgages, or from sale of real estate assets. They must pay at least 90% of its taxable income in the form of dividends to shareholders each year. These regulations are making REITs very closely related to the real estate market. They are obligated to pay out 90% of their total earnings as dividend, and that means that these companies are paying huge dividends. And that is sort of like the same as owning a property and getting the rental income every single month. So when you're buying shares in a REIT, you are both getting the exposure to the real estate market and the returns that this include, but you're also getting a rental income or a dividend payment. So let's get into my personal top 5 REITs. But first, if you are a REIT investor, then please let me know in the comment section below what your favorite REIT is. I would love to hear that. The first REIT on my list is Realty Income. This REIT is also known as the monthly dividend company. And that is, of course, because they're paying a monthly dividend to their shareholders. The company owns more than 11,700 properties across 79 different industries in the US. They have an occupancy rate of 99%, and that is very, very impressive. They own a bunch of different property types and have big customers like 7-Eleven, Chipotle, FedEx, and Walmart. They have a market cap of $44.6 billion and a current share price of roughly $66. They are paying a massive dividend yield of 4.62%. And the company has been increasing the dividend yield for the last 27 years in a row. The company has an A-rated balance sheet, and that gives them a big advantage over their competitors when it comes to investing in new properties at a low interest rate. This is one of the biggest REITs in the world, and it is one of the most well-known REITs there is. It is definitely a must-have in any REIT portfolio. The second REIT on my list is Prologis, which is the largest warehouse REIT in the United States. Like Realty Income, then does this REIT also have a very well-diversified portfolio with more than 5,500 buildings that combined are more than 1.2 billion square feet across 19 different countries. They have an occupancy rate of 98.2%, which is also very, very good. Prologis does also have an A-rated balance sheet, giving them the best interest rate for expanding their business and investing into new properties. They have a total market cap of $115 billion and a current share price of roughly $125. I've actually recently bought into this REIT as the share price has been falling a bit during the last year, and I saw that as a really good buying opportunity. They have a current dividend yield of 2.5%. and they have been growing their dividend yield for the last 9 years in a row. The third REIT on my list is Public Storage. If you live in the US, then there is a high chance that you already know this company because they have buildings all over the place. It is the world's largest owner, operator, and developer of self-storage facilities. They have more than 2,900 facilities across the US, serving close to 2 million customers. The company was founded 50 years ago, has 5,700 employees, and a total value of $63 billion. It is the fourth biggest REIT in the US, and just like the other two, then does this one also have an A-rated balance sheet? The current price per share is $299, trading at a PE ratio of only 12.15, and the current dividend yield is 4%. Public Storage is definitely a high quality REIT, and if you're thinking of adding another REIT to your portfolio, then I would highly recommend you to look further into this one. The fourth REIT on my list is Digital Realty Trust. It is a REIT that engages in the provision of data centers, co-locations, and interconnection solutions. It currently has more than 300 large data centers and more than 4,000 customers. The data centers that they have are being used within industries such as cloud storage, artificial intelligence, networks, cloud services, and many others. These sectors are becoming more and more important for companies, and that development will most likely continue, and that will increase the demand for these data centers, making this REIT even more interesting for the future. The current share price is roughly $110, with a total market cap of $32 billion. During the last year, the share price is taking a hit, and the biggest reason for that is because the tech companies have had a rough year with the high interest rates and the high inflation. But I have actually used that as a buying opportunity, as I do think that this REIT has a big growth potential. They also have a dividend yield of 4.41%, which is also really good. Overall, I find this REIT very interesting, and it is definitely one of the REITs with the highest growth potential. The last REIT on my list is actually not a stock, but an ETF. It is the Vanguard Real Estate Index Fund that invests only into stocks issued by REITs. And the goal of the ETF is to track the performance of the investable market real estate 25/50 index. The ETF currently holds 176 different stocks within 12 different sectors of the real estate market, with largest proportions in the industrial REITs, residential REITs, and retail REITs. What I really like about this investment here is that you're not relying on a single REIT. When you're buying one share of this ETF, you basically own 176 different REITs, and that gives you a really good diversification. Over the last 10 years, this REIT has given an average annual return of just above 7%. The current dividend yield of this ETF is 3.54%. And just as with any other ETF, then there is also an expense ratio that you have to pay for owning this ETF. However, the expense ratio here is really low at only 0.12%. If you're looking to get real estate into your investment portfolio, then I would highly recommend you to start here by buying this ETF. It has a solid record of high growth and high dividend payment, and it gives you all of the diversification that you need. And that was all I had for you guys today. If you did stick around to this point, then please let me know what you thought of my top 5 REIT picks in the comment section below. But anyways, thank you so much for watching the video, and if you actually liked the video, then don't forget to smash the like button below and subscribe to my channel for more weekly content.